Warren Buffett, also known as the Oracle of Omaha, is widely regarded as one of the greatest investors of all time. His investment success, business acumen, philanthropy, humility, and ethical business practices have made him an inspiration and role model for many people around the world. One of the reasons why Warren Buffett is considered great is his investment success. He has consistently outperformed the stock market over several decades and built a net worth estimated to be around $104 billion as of 2023. He is a proponent of value investing, and he focuses on companies with strong fundamentals and competitive advantages. With his success in the world of investing, it's no surprise that many aspiring investors look up to him and try to replicate his incredible achievements in the stock market. Indeed, Buffett has quite the following, and whenever he buys or sells a stock, Wall Street and retail investors pay close attention. Now, some stocks generate more income than others, and today we'll talk about that. Hey, welcome to Stock Market Mate. Today we'll discuss the 3 stocks that generate 47% of Warren Buffett's $6.1 billion dividend income. Whatever these stocks are, they certainly generate huge returns, so stick with us until the end of the video to find out. However, before we get into it, be sure to hit the like and subscribe button to help us beat the YouTube algorithm. Warren Buffett, the CEO of Berkshire Hathaway, has been one of the most successful investors on Wall Street, consistently outperforming the benchmark S&P 500 over the last 6 decades. Since he took over, the Class A shares of his company have increased by an astonishing 3,787,464%, which is 153 times greater than the S&P 500's return of 24,708%, including dividends paid during the same period. Warren Buffett's tremendous success in outperforming Wall Street can be attributed to various factors, such as his focus on investing in reputable businesses with competent management teams and his preference for a long-term investment approach. However, one aspect that is often overlooked is his fondness for stocks that pay dividends. This is an undeniable reason why Berkshire Hathaway has been so successful over the long term. Businesses that consistently pay dividends are usually profitable on a consistent basis, have clear long-term strategies, and are established. They have a proven track record of significantly outperforming their counterparts that do not pay dividends over extended periods. Assuming that Berkshire Hathaway's portfolio remains unaltered throughout 2023, the company would receive approximately $6.14 billion in annual dividends. However, the majority of this dividend income would come only from 3 investments, and none of which include Apple. Chevron, $1,010,816,777 in annual dividend income. It is anticipated that around 1/6 of the total dividend income for Berkshire Hathaway in 2023 will come from an energy stock. Chevron, which recently raised its quarterly payout, has been increasing its annual base dividend for 36 years in a row. Chevron is the 3rd largest holding of Berkshire Hathaway in terms of market value, with a value of $28.6 billion. Warren Buffett, along with his investing partners Todd Combs and Ted Weschler, would not have invested over $28 billion in Chevron if they did not have a strong conviction that the prices of energy commodities, especially oil, would remain high, despite the Federal Reserve's meeting minutes in March suggesting a potential mild recession later in the year, which could negatively impact crude oil demand and prices. There are some macroeconomic factors that support the notion that crude oil prices may remain higher than their historical average. The COVID-19 pandemic has caused 3 years of underinvestment in capital, and the invasion of Ukraine by Russia makes it unlikely that there will be a significant increase in the supply of oil and natural gas in the near future. When the global supply of major energy commodities is limited, it typically leads to favorable spot prices. Buffett and his team likely have a favorable view of Chevron due to the company's integrated operating model. While the drilling segment generates the highest margins, Chevron also has profitable midstream assets, such as transmission pipelines, and downstream assets, including refineries and chemical plants. Midstream assets generally provide steady operating cash flow, while downstream assets act as a safeguard against a drop in the spot price of oil. Chevron received an added advantage as it was able to significantly decrease its net debt in the previous year, which allowed its board to authorize a share repurchase program of up to $75 billion, adding to its appeal. Occidental Petroleum, $952,429,702, which includes preferred stock dividends. It may seem surprising, but another oil stock, Occidental Petroleum, is responsible for the 2nd largest annual dividend payout in Berkshire Hathaway's portfolio. Berkshire's ownership of approximately 211.7 million shares of Occidental will provide an annual dividend income of $152.4 million, while the remaining $800 million will come from a $10 billion preferred stock position held by Berkshire that yields 8%. The factors that drive Occidental and Chevron are compatible, but not identical. The substantial investment made by Warren Buffett and Weschler in Occidental indicates that they anticipate that the prices of oil and natural gas will stay elevated for an extended period. One major contrast between Chevron and Occidental Petroleum lies in their revenue streams. Despite both being integrated operators, Chevron derives a significant portion of its annual sales from its midstream and downstream operations, while Occidental generates most of its revenue from its drilling operations. As a result, if crude oil prices were to remain high, Occidental is expected to benefit through increased income and cash flow. Moreover, Occidental Petroleum is considered a potential turnaround investment. Chevron has one of the strongest balance sheets among global energy majors, but Occidental has struggled with debt after its acquisition of Anadarko in 2019. Although the company reduced its net debt from $35.5 billion in March 2021 to $19.7 billion by the end of 2022, Occidental still needs favorable macroeconomic conditions to enhance its financial flexibility. In general, Warren Buffett doesn't usually consider a company with a weak balance sheet for significant investment. However, in Occidental Petroleum's case, its massive annual dividend income of over $952 million is hard to ignore. Bank of America, $908,909,765. One of the three stocks that are major contributors to Berkshire Hathaway's annual dividend income of over $6.1 billion is Bank of America, which is the second largest holding by market value. Banking stocks are believed to be Warren Buffett's preferred industry to invest in, mainly because they are profitable during economic upturns. Although he acknowledges that recessions are a regular part of the business cycle, he favors investing in cyclic businesses, including banks, that can profit substantially during long periods of economic expansion. Bank of America, in particular, has the potential to benefit from growth in loans and deposits as the U.S. economy grows. It is likely that Warren Buffett and his investment team also recognize the value of Bank of America's industry-leading interest sensitivity. When the Federal Reserve raises interest rates, banks with outstanding variable rate loans benefit, and Bank of America is considered the most interest-sensitive among money center banks. During the first quarter, Bank of America's reported net interest yield increased by 51 basis points to 2.2% compared to the previous year, resulting in $14.6 billion in net interest income, a $2.9 billion year-over-year rise. Despite not being known for banking innovation, Bank of America has surprised many with its success in technology investments. In the first quarter, it completed 51% of all digital sales through online or mobile channels, a substantially cheaper option for banks compared to in-person or phone-based interactions. This has resulted in increased operating efficiency, which benefits the bank. Bank of America's potential for capital returns in the short term may be impacted by the Federal Reserve's prediction of a mild recession later this year. However, the bank has a strong track record of providing returns to shareholders through dividends and share repurchases over the long term. Thanks for watching this video on Warren Buffett's top 3 dividend stocks that account for 47% of his more than $6.1 billion in annual dividend income. As you've seen, Chevron, Occidental Petroleum, and Bank of America are not only impressive dividend payers but also have unique characteristics that make them attractive long-term investments. Remember, investing in the stock market always carries risks, and it's more important to do your own research before making any investment decisions. If you found this video informative, don't forget to like and subscribe to our channel for more insightful content. Thanks for tuning in, and we'll see you in the next video. If you enjoyed this video, you're going to want to watch one of these 2 videos right here. Enjoy!